and welcome to the Trading Zone. Another week of hectic markets. A really big, busy trading week, Brian. Really excited to have you all here, and I don't want to waste any time. Let's jump right into it.
Yeah, I'm Brian Stutland here with Joe T.A., my colleague here at Equity Armor Investments. We're portfolio managers on a couple of mutual funds, but we come here every week giving our opinions. And yeah, we do have a big week. Obviously, the Federal Reserve decision on interest rates coming up here. And when you take a look at it, we just coming off the markets of a deal with the European Union that was announced this weekend. The markets were up, but although selling off a little bit today. But Joe, we want to jump right into the volatility landscape, don't we? We're traders of the VIX. We're specialists in there. We made markets on options on VIX, and so we've developed some algorithms ourselves for our clients. But we want to give you some insight as to where we think the VIX and volatility is going.
Yeah, we know the markets were higher, pre-market fading just a little bit flattish to slightly higher right now. We got the VIX itself up on the day, Brian, but it's low. It's at 1550. We got some fear gripping the market here. Not extreme fear, but we're on the higher end of the range. Maybe there's still some room higher in terms of melting higher when it comes to fear. Be watching that closely, but I also wanted to look at this investor sentiment. I know this is really focused in on volatility because I think sentiment and volatility are very closely related. We're not really very overtly bullish here. We're just in the middle of the range here. We're not too bullish, we're not too bearish. Maybe that's a good sign for bulls. But I just wanted to highlight something right here, Brian. The 52-week high was last August. So we're coming up to August. We'll be in August this week. By the way, we'll have the jobs report Friday, so it's a big week for news. But we're coming into August. We're coming into the time of year where volatility starts to pick up. We saw some big sentiment increases in August last year, and that was because the Fed was going to be cutting rates in September. Another big event this week, Brian. We've got the Fed this week. They're not cutting this time, but they're probably cutting in September. So it's kind of lining up for a little deja vu from last year.
Yeah, well, I mean, although the Fed cut, if it comes in September, could save the market from any volatility, but we are seeing VIX futures trade well above.
You think you're going to get less volatility with the cut, but maybe the lack of the cut is why there is no volatility. Maybe the cut's going to bring some volatility, Brian.
Well, we'll see about that. I mean, look, the VIX futures, like I just said, are trading above where the VIX is at extreme levels. It's almost like a 20% premium when you look out at September, October VIX future here, right on the curve. And that steepness is super steep to where it was a month or 2 months ago. Now, obviously, we had the April tariff shock on the back end of that, but still very, very, very much steep here. People expecting some sort of volatility pop here. We're going to need some kind of news.
Hey, but you know what? It usually comes. September volatility usually comes. You just need to remember that. We should not be so shocked if it happens this time around. It would be very healthy almost for this big run we've seen in the market, have a little bit of pullback. I think you'll find some people sitting on the sidelines are going to be waiting for that pullback, looking to buy it up.
Yeah. So, I mean, when you take a look at it, if we, scroll back a little bit, we do like looking at the S&P skew right here. We look at calls relative to puts. You see this green line, this support line that's been really going on for a long period of time now, right? Acting as support, meaning that we get down to these levels and then all of a sudden people want to own puts because the lower this skew is, that means there's a pretty high demand for calls right now relative to a put. But as we get down to this lower level, it's held its spot. People look to buy puts here, get some insurance, and then we usually see a volatility kicker that comes into play here that raises the level of volatility in the marketplace.
Yeah, and to put it another way, like this is kind of a leading indicator for volatility for us. When we see this picking up before the volatility, that's a sign, hey, something seemingly is wrong. Another way to think about it, though, here, Brian, here at all-time highs, calls relative to puts are more expensive. So it seems like people are buying these calls right now. They are betting on more upside. Maybe it's just something to think about. Maybe that's not the best way to get some exposure right now. But we'll take a look.
Yeah. So I mean, look, if the volatility, if the skew kind of flips and pushes higher with people coming in with some put buying, those big institutional traders that buy downside puts and can actually make a dent in this skew, they're usually right. So let's keep an eye on that.
Yeah, well, certainly if we get a new, if we make this relative high right here, that's something that's going to catch my radar and be worth noting. Right now, just kind of in no man's land. We're kind of waiting for something to change. We're going to get into a lot later in the episode, but be watching the growth stocks, watching like Bitcoin. If they are to turn south, maybe that'll be a sign that, hey, maybe the momentum is running out. But let's get into it because it absolutely is a huge week here, Brian. I mentioned it's jam-packed. Yes, we got trade deals coming through over the weekend, still kind of finalizing them right now. We got the FOMC meeting. We got non-farm payrolls coming out on Friday. We got a lot of earnings coming this week. So it's going to be a busy week. There's a lot of news out there. We'll see what market does. Market's sitting at all-time highs here as we're ending July.
Yeah. So, I mean, you mentioned the big week ahead, and it's the Fed decision, it's other earnings, it's the employment numbers. So these will all be interest rate moving events. There'll be market moving events, and I mean, it's still kind of smooth sailing for the market right now. There really is no warning sign to me of a news event that's going to really flip it. I think the Fed will indicate that they could be more accommodative if things get worse. But also, Trump has kind of, changed his tone a little bit. I mean, he's continually to pound and hound on Powell, but at the same time, he's kind of changed his tune a little bit. Hey, look, the market's at all-time highs. We're doing a great job with the economy. Maybe it's okay to just wait for the rate cut, but a rate cut certainly would save a lot of money for the U.S. In terms of debt and what they have to do to repay.
Yeah, but we'll see. But it's funny, Brian. We've been talking on this show and elsewhere for months, all the way back through May, how coming up we're going to get trade deals. Coming up we're going to get rate cuts. Meanwhile, the economy is still strong. Coming up we're going to get this budget passed. It seems like now that these are all coming to a head, the market was kind of ahead of it, bought all of it. Now we're at all-time highs. Now that we're going to get all these things coming together, I'm kind of a little worried. Maybe we had to buy the rumor, and now that we get to the news aspect of it, I think that's where I'm a little bit worried. Remember, I'm just kind of painting the picture here. We're at all-time highs. Seasonality, September is a time for volatility. I'm just bracing for it, ready for it. Now, if the market continues and goes higher through September without any hiccups, great. If there is some volatility in September, I just want to be ready for it.
Yeah. So, I mean, I looked at it actually. I think there's about 7 times in history where the market was, call it at all-time highs within 1%. JP Morgan looked at a study on this, and it turns out that when they do cut and the market's near all-time highs, it actually does create some volatility like you're talking about, Joe. The market really kind of doesn't do much for 6 months, but 12 months out down the road, as that rate cut takes an effect, the median return is about 15% return on the S&P. So, the picture still is rosy long term, but yeah, I mean, volatility traders are looking for increased volatility, and like you mentioned, that could create some, hey, we buy the rumor and then now it's time to sell the news.
Yeah, so we're talking about this big trade news. Yeah, EU, that's definitely a very big deal. The next one on the table, Brian, is going to be China. Currently, U.S. and Chinese officials are meeting. Maybe they're going to extend that deal. Nothing happening yet. Maybe this will be a catalyst for volatility later in the year. Maybe it'll be a catalyst for the market to raise higher later in the year, but it's still another pending item.
It's still kind of funny to me that two places that hate each other are going to make a deal. But seemingly they do. I don't know. Maybe as time passes, you hate each other a little less.
Yeah, it's a symbiotic relationship. We do need the rare earth metals, and they are helping us maybe with some cheap labor and certain things. I'd like to see us get some of that trade with other countries in the region, specifically India. But we'll see how that plays out.
Yeah. So when we look at here, 60% cut at the next meeting in September, I think it's about accurate. I mean, I would almost give it a higher percent rate that we do cut in September. But if the market
bet you by after this week, after we get the jobs Friday, this is going to be it's going to move. It's probably be 75 or higher, or less than 50, depending on the news.
I mean, do you need an employment rate tick up in the employment report for that to go to 75%, or do you think it's just the language of the Fed that's going to occur later this week?
It's more so the hourly wages for me, but it would have to be something like the economy's super hot and we can't afford a rate cut, which I don't necessarily think is coming in this jobs report. So I think just once we get past that, there'll be a little more certainty.
I like how you brought up the hourly rate. I think that's actually important. If that comes in a little bit lower than expected, then that might be more fuel for the for the Fed to do
I mean,
something.
at this point, it's kind of written in, like they want to cut. They're just kind of been waiting for like these trade deals to come through to have the certainty on the tariffs before they made a conclusion about inflation. But yeah, it's just one final data point, one more data point. If the wages are not spiraling out of control, they'll have a little bit more comfort there that inflation's not going out of control. But like we said, here are the charts. Just record territory. Again, just amazing run ups. I mean, we talked about how we're right here, but we're not in extreme greed on the fear and greed index like we talked about earlier. We're not overly contrarian bullish like in the AA2 index. So maybe there is still some room to the upside. Just watching this very closely. Of course, same stories going on in here in the NASDAQ. Same story is seen here in the SMH, the semiconductor index. So it's kind of leading the way. But this was something we've been talking about for a couple of weeks now, Brian. The Mag 7 had been lagging, and we theorized, this could be a hurdle for the market. If we get to this spot, we expected the market to rally higher into tagging this double top here area. We suspected this could be a natural area for the market to pause. We're there right now.
We are, and we got kind of a weak earnings report from Tesla, which brought the stock lower. But then Trump said, "Oh, we're going to still continue to support their industry and whatever." So the stock kind of rallied back a little bit. But obviously Tesla's in the Mag 7, and that's going to provide a drag. So that right there, to me, in that Tesla report, the most concerning thing was actually the auto sales. I mean, look, Tesla is a leader in the automobile industry right now, and if their sales are revenue year over year are declining, that is a little bit of a warning. We got other warning signs from places like Chipotle and some other consumer discretionary areas that are showing some weakness, and maybe the tariffs for the consumer discretionary is starting to play out a little bit where profit margin, companies haven't really been able to raise prices as much as they thought they could, and profit margin is now shrinking on them. So to me, that's kind of an interesting play in that area of the market that's showing some weakness. So that's something to kind of keep an eye on.
Yeah, watching that closely. Yes, watching all these stocks super closely. It's just amazing to watch it all play out. They are front and center when it comes to this AI revolution. It's not smaller companies. It's not these IPO names like we knew in the .com area. It's the biggest, largest companies in the world that have had the most growth over the past 5 years. So just watching these companies closely, seeing what they're doing, Tesla 5 years from now might look completely different than it looks right now. It might be robotic car industry, maybe not 5 years, maybe 10 years from now. We'll be inching closer toward that every year. But yeah, it's just amazing to see the growth that we're seeing in the technology, and it's just super fun to watch. We'll be watching it. But in the meantime, while we're growing there's going to be hiccups along the way. We've seen a lot of momentum recently. We know a lot of that kind of is displayed here in Bitcoin. I'm thinking if there is going to be a pause in this momentum, we're going to see it here first. We're going to see it in some of the hyper growth names, maybe Palantir. As much as I love Palantir, we're going to see it in those names too.
Yeah, Bitcoin's an interesting chart because that trend is higher. It's been a leading indicator for some time now on the rest of the market. People willing to take risk. I still think there's some correlation and tied to electricity, the grid, the price of Bitcoin, and how that affects energy needs for AI. So there is some tie there. It's been a hot area. We've seen a lot of altcoins just go bonanza recently. Maybe that's just exuberance in the market, Joe, to your point that we're kind of due for a sell-off, that there's just too much money trying to find a place to go somewhere. And that should never really be the case. The
altcoins is very interesting. Could be a sign that things are kind of frothing up just a little bit. we'll see how long that lasts.
Yeah, the altcoin to me just has always been mind-boggling, Joe. I just don't understand. Like there's another altcoin you can make. So it's really an endless supply of alti kind of coins. I don't care if like one name has some particular meaning or whatever. To me, it's like it's Bitcoin, which has to do tied to mining and the supply of that. It's Ethereum because there's smart contracts that can be created off of that, and useful development. But other than that, to me, these altcoins are just speculative money, just floating around doing, I don't know, whatever, gambling basically.
Yeah, no, it's 100% the case, but there's a lot of stocks with less than stellar earnings, which you might point your finger and say that's gambling too. But at least there is some ownership on something tangible.
Oh yeah, I mean, if you look at some of these other names like Kohl's and a handful of other companies out there right now that have taken on that GameStop mentality that are going up on nothingness, it is kind of interesting that the speculation is beyond just the altcoins. It is into these other basically worthless entities where money is just, I got to find somewhere to go.
Yeah, so it's interesting. It's interesting. I think we'll see the trouble here first. That's my next theory. I kind of had the first theory in the Mag 7. We're going to touch that double high. We'll see if they can get through there. They're going to be great for the stock market if the Mag 7 does go there. My next theory is that this Bitcoin is going to see some trouble. But while we're leading into that trouble, we're going to have this Fed meeting this week. I suspect the Fed's going to set the stage for some rate cuts coming forward. They're going to move that 60% probability up over at 75 following the meeting. So I think the market's going to start to price that in. Remember, going back to last year, we saw that bullish wave in August. I think we're going to get that bullish wave again here. Just real quickly, let's run back to the S&P 500. Look at September here. We had this big dip here in September. Are we going to see that again? We'll see September volatility again in 22, September volatility again here in 23. September is just a time of volatility. Is it going to happen again this year? We'll see. I think a big bullish sentiment, big bullish euphoria happening in August is a concern for me. So with all that said, Brian, talking about the Fed cutting rates, talking about a bullish euphoria, what is my trade of the week? Any guesses? Well, I mean,
yeah, I mean, we got to continue to discuss the anti-fiat currency move right here. And we mentioned Bitcoin. Gold is obviously one of those that has tracked towards, inflationary pressures, towards government debt, exploding. And gold's found kind of this range around 3,300 to 3,400. Back and forth. You can see on this chart, it's run into some resistance levels here, but yet it still continues to make higher lows, right? So where are we going from here?
We absolutely got this flag thing happening here. So just kind of watching this very, very closely. We're on the lower end of its range, and we're lower today. I think today is the spot where I want to stick my feet into gold and start swimming in some gold coins like Uncle Scrooge. Let's do it. I'm looking at the 310, 320 call spread in August. I'm just going to dip my toes in here. 2.25 is the price. Kind of a cheap way to play to the upside. Not looking for it to break through 320 before August. Remember, that's been kind of the upper end of that flag I was talking about. But very reasonable to think it'd go back to the higher end of this range. And it's pretty cheap to do so. Remember, the calls are very expensive. So that 320 call is probably more expensive than you would expect it to be. It's about 90 cents right now. So made it a lot cheaper to get into this call spread.
Yeah. And so when we say pay 2.25 for this, it means we're going to buy. I'd be buying the 310 call. I would sell at the same time the 320 call. So by selling the 320 call against the 310 that I bought, I reduced the cost for a net trade cost of $2.25. So what does that mean? It means I need the stock to get through 312.25, 312.25, because that's the cost of the call spread plus that 310 strike price. So 312.25. Above there, I profit all the way up to 320, at which point I am then called away from the long call that I bought. So the max profit there is $7.75. When you look at that payout ratio, you're looking at about roughly 2-to-1 payout on risk. So it's a pretty good risk reward. We got
right here, Brian. It's a little lower than where I put it on. But yeah, you can see it right here. You got the 310 call for 260, the 320 call about 70 cents. So you can see I do not want to spend all of that 260 just getting long this call. I think by selling that upside call makes that 310 call much cheaper for me to get in, and I'm not really expecting it to race through a 320 anyways.
Right, and you can see with GLD around 305 right now currently, this call spread would expire worthless if GLD just sat here for the next call it 3 weeks, right? So this is August 15th expiration, as Joe mentioned. So we need GLD to sort of break above this flag pattern. Where's really kind of top end? Yeah, you can see there the high 317, right? So we'd have to kind of get towards the top end of this range. And look, I don't have to hold this all the way to expiration, right? And just let the $2.25 bake away. This has what we call option traders a delta to the market, meaning that as GLD rises, the value of the call spread also rises. So, if we get towards the top end of the range and I don't want to wait it out, if it gets there kind of quickly, maybe we send a trade alert out. For those that subscribe to our service, you can do that for a very cheap price of $29.95 a month. And actually, you can get 4 months free, basically a $200 rebate credit if you open up a trader account, and we'll give you those trades for 4 months, basically. So look, when you do this, we obviously want to update this. When you buy options, you kind of want to be a little proactive in how you handle that, so that determine whether you want to hold it all the way to expiration and let it go, or take some profit when the value of those options go up in value. Sometimes we decide to just capture that and close it out, right, Joe?
100%. Yep. It can be tricky. It can be kind of watching a slippery, something slippery floating around, trying to get the best price possible. But yeah, it just takes some discipline and just saying, hey, I've made some profit. Time to get out.
Right. All right. So this is a play on the Fed. We'll be watching really tightly and close this week, listening to see what they have to say. If they indicate rate cuts, that will obviously affect our trade, and we'll give some updates going forward. Make sure you tune in every Monday at 10 a.m. Eastern. We go live here on the Trading Zone, sponsored by Tradier Hub. Thank you for putting us on here. Make sure you check us out on YouTube at Equity Armor, or check Joe and I out on X. We're pretty active in giving posts and ideas about the market at Brian Stutland or at Joe Tigay. Make sure you tune in every week here. I'm Brian Stutland here with my colleague Joe Tigay of Equity Armor Investments. We'll catch you next Monday, 10 a.m. Eastern. Tune in. See you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.